Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 30th of November 2019 and we're providing our gold and silver weekly update for the week ending the 29th of November. Gold rose $1 last week from $1,462 to $1,463, having hit a high of $1,466 and a low of $1,450. In sterling terms, gold finished the week at £1,131. That's down £8. And in euros, it closed at €1,328. That's up €1. Silver rose 1 cent, from $17.01 to $17.02, having hit a high of $17.12 and a low of $16.82. In sterling terms, it closed at £13.16. That's down 9 pence. And in euros, it closed at 15.45 euros. That's up 0.01 euros. The gold to silver ratio remained unchanged at 85.9 to 1. Now, the Dow Jones closed on Friday at 28,051, down 112 points on the day, but up 176 points on the week. And the NASDAQ closed at 8,665, down 39 points on the day, but also up some 146 points on the week. And the S&P 500 closed at 3,140, down 12 points on the day, but up 30 points on the week. Once again, all three indices providing positive returns for last week. Now, Brent crude closed at $60.49, down some $2.90. And WTI crude closed at $55.17, that's down $2.60 on the week. The dollar index stands at 98.27, that's unchanged for the week. Now, we ended last week's video podcast with the following comment, quote, "Our conclusion for this week is similar to last week. A maximum range of $50 high and low for gold and $1 to $2 for silver. In other words, no major move in either direction for next week." Well, in fact, this past week was even less remarkable in terms of price movements than even we expected. With gold moving within a band of $16 and silver within 30 cents between highs and lows, it certainly has proven to be pretty unremarkable. That said, in retrospect, it should not have been a surprise. With Thanksgiving Day on Thursday, Black Friday shopping yesterday, and economic data only really being announced Tuesday and Wednesday, and even that was somewhat bland to mildly positive, there was little to cause the US dollar to move in either direction, and similarly for gold and silver prices to do likewise. The economic data of note was an uptick in GDP revision for quarter 3 from 1.9% to 2.1%, and positive durable goods orders and consumer spending for October up 0.3%, some 0.1% higher than expectations, and this all served to keep the dollar index holding firm and gold and silver prices pretty much in check. So, although gold rose on Friday from its previous few days' lows, primarily the result of the dollar weakening slightly to positive EU CPI and German unemployment figures, it was still down by some 3.2% for the month of November. Now, we need not worry about that because it's still very positive news for this year as a whole. From a technical analysis point of view, gold does look as if a further weakening short term is likely in order to complete the correction which began in September. Now, we're pleased to have seen gold actually hit our magic and much heralded figure of $1,450, albeit briefly, as we were predicting this level when gold was up in the near mid-$1,500 range and looking as though it could go higher. But that's just pride and ego speaking on our part. The issue, though, on most traders' lips is, will it fall back further from here? Or is there sufficient interest at 1450 to ensure it acts as a solid and sustainable floor or support level? Now, as we suggested last week, if gold were to break down below the 1450 level, it's likely that the 1420 level will be targeted, as it is basically where the 50% Fibonacci retracement level rests, as well as the 200-day EMA. That said, Friday's rise is a positive sign, and all it would take is a hiccup in the US-China trade talks or some additional negative economic data to push gold back up towards that 1480 and then $1,500 level. Silver again this week virtually followed gold's path in terms of price directional movements, though it was perhaps more choppy, with wilder swings within a relatively narrow range. It does, however, seem uncomfortable resting for too long below $17, and this should give heart to those hoping for a price increase. Technically speaking, silver is falling within two major price points, namely the 50-day EMA, which will push it towards $18, and the 200-day EMA, which will see it fall to $16.57. Now, there is quite a lot of economic information out this week, which will likely impact prices, and we should see greater price movements as a result. So let's take a look as to what these are. On Monday, we have the Market Manufacturing PMI for November and the ISM Manufacturing Index for November. Tuesday, Motor Vehicle Sales for November. Wednesday, ADP Employment for November. This will give us an indication to the non-farm payrolls on Friday. We have the Market Services PMI for November on Wednesday and the ISM Non-Manufacturing Index for November. On Thursday, we have the trade deficit for October and the factory orders for October. Friday, and the most important day in our view, non-farm payrolls for November with the unemployment rate and average hourly earnings for November. We have also wholesale inventories for October and, be interesting to see this one, the Consumer Sentiment Index for December. So, we have a large amount of data and reports to digest next week, many of which have the potential to influence the dollar value and gold and silver prices, either directly as a result of the dollar or indirectly because of the effect they may have on equity markets. For the moment, it looks as if the Fed is unlikely to alter interest rates at its December meeting, and this is further supported by reports out today that Black Friday sales figures appear to be considerably higher than last year's, with Barclaycard announcing this very morning that at 1000 hours GMT yesterday, transaction volumes were up 12.5% from last year, and between 1300 and 1400, they were 9% higher. Admittedly, that's only one report, but other retailers are now beginning to suggest the trade was brisk. However, as we pointed out last weekend, and are reiterating it again today, prices for gold and silver also hinge on the US-China trade deal and the potential for Phase 1 to be agreed before the end of the year. There are also some geopolitical issues not to be forgotten about either. For example, the continuing disturbances in Hong Kong, and North Korea today branding Japan's Prime Minister Shinzo Abe an imbecile and political dwarf, accusing him of mislabeling its latest weapons test. Now, we are still positive equities, at least into the early part of December, and possibly lower prices for gold and silver, again until there is an equity turnaround and reversal. Now, as we've said previously, we're not talking about major moves for either, just a grinding trend. But if a trade deal is agreed and announced shortly, we can expect a further jump in equities and a fall in gold and silver prices. And this may give traders a good time to sell equities and for stackers then to buy gold and silver. We shall just have to wait and see. So for this coming week, we are somewhat reticent about making a more precise prediction for gold and silver prices, as we are expecting a lot of volatility. Friday's rise is positive, but if the trade news is good next week, then the dollar will almost certainly strengthen, placing downward pressure on precious metal prices. Now, we accept the dollar value is not the only influence, but of course, brisk trade next week could help equity markets too. But that said, a delay in the deal with China, or worse than expected trade figures, could indeed have the opposite effect. Now, all things being equal, we see prices perhaps rising following through on Friday or Monday, and then being totally dependent on economic reports as and when they are announced, with the greatest emphasis being on Friday. Needless to say, that will then give us a guide as to the likelihood of the Fed's decision on interest rates the following week. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of videos as and when they are published. Finally, just a reminder that we have produced two very important in our view videos in the past couple of days. One, published yesterday, entitled $100 plus silver, really? And one published the day before, Is there really a silver supply squeeze developing? Now, they're quite long videos, at or around 30 minutes each, but if you haven't had the opportunity to watch or listen to them, we strongly suggest that you do so when you have half an hour or an hour spare. And also, if you've joined us on the Discord channel, we are holding the first of a number of Q&A sessions this evening at 2100 hours GMT. So we hope to see you there. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.